Hey, good morning, everyone. This is Vance out of Seattle, Washington, and welcome to my live Forex trading show. Missed the past couple of days. Something came up, but I'm back, and usually I'm always here. Today, in addition to the price and a little bit about fundamentals, I'm going to be talking about what I call a trading psychology secret, and I'll go into that. And it's not really a secret. It's just people aren't aware of it. And it has a huge impact on your trading results. So I'll be sharing that with everyone this morning. I want to show you very quickly how to join the conversation here. Let me bring it up for you here. When you do click into the show, you'll end up here. And when you click play, I want you to notice this be part of the conversation. If you click into that, what it's going to do is give you access to more of, you'll be able to see more of what I'm talking about. Okay, so again, just click on join the conversation on that pop-up. All right. Oh, by the way, if you guys are coming from my popular YouTube video, if you go to forexartofwar.com, let me just click log out real quick so you can, here on the top right at forexartofwar.com, you can get those free books that we talked about, the 8 things they don't tell Forex traders and the first battle. Okay, now let's take a look at price. Oh, first, let me just talk a little bit about fundamentals. There isn't a lot going on this morning in terms of, there's no central focus on banks or anything else. It's just a lot of talk about investment. Things are pretty stable out there this morning. All right, so let's take a look at price. I haven't actually got to looking at price this morning, but let's do that. We're seeing that the euro dollar is currently intraday in the downtrend, pretty strong. Let's take a look at how big that trend has been. It's about 200 pips, so very, very strong. Another move down. We're still, a couple hundred pips or 160 pips anyway above that 12500 level where we took that big 300 pip bounce. So in terms of looking at price right now, you can see that price, some of our traders caught trades in here. And then you can see it's little choppy little moves, nothing special here. One last push and up, probably some, some high impact data around this time. Right now, we're in a little bit of a correction mode. So probably would put a fib right here. And let me put a price label on there for you. Show you about right there is probably where the key level is for the buyers. You'll get the buyer to seller balance to turnover right in this area. And then this will probably be the area where it'll be a key level. And what a key level is, one way to think about that is just to think in terms of where buyers and sellers are basically likely to have equal interest. And so you'll get a lot of conflict right here at this level. We break through here, then we look for a trade. On the bottom side, and keep in mind, this is a long trend. We'd be looking for 2620, break below that. So we've corrected right now to 50% of this last move down. And right now, the market will just need a pretext to make a further move. So that's what you'd be looking for on the euro. On the pound, there was a couple of moves yesterday right here that some of our traders caught. Let's zoom into this section here. It looks like there's something happened here this morning. Let's zoom in and take a look and see what was available there. Okay, so one of the things you've got to do is you've got to be able to properly identify where these waves actually move and advance. It's kind of like being able to watch a tug of war and being able, I mean, it seems pretty obvious, but you're able to see that one team is being dragged towards the mud. You got to have some way to see the shift in this balance of buyers to sellers. And the technique that I teach, and it's on my webpage, Master the Fibonacci Tool, it's called New Waves. And what you do is you got to know the start point, and you got to watch to see if it retraces 38.2 or more. So this actually makes a move all the way to here. And the pattern that we're looking for, that everybody loves, is price makes a clear move in a direction. And when it does, without a pullback, it pulls back, and then it pushes again in the direction of that move. And so that was potentially a trade there. I think some of our traders caught that. Now, once that happens, once you see that behavior play out, the only rule about a right shoulder is that it follows this pattern. And so you end up with your right shoulder right here. Okay, so then we correct up a little higher. So since we're corrected now, again, we need to wait to see what will happen. So let's drop down to back up to a 30-minute chart. I'm going to put a label here. Look for a move below. Okay, so it's the really important number, the 16,000 level. So the quad zero. Actually, how many zeros? 1, 2, 3. Yeah, it's 4 zeros with the fractional pips in there. But 16,000 is where we need to get through. It didn't make a tremendous move through here, but there will be some buy orders in this area. So if it moves prior to getting below this level right here, you're going to have some buy orders sitting in here. So if it moves down a little bit, expect a stronger pullback. Now, let's see what the top side is. In terms of correcting up, we're going to need to, it's going to be difficult to get a correction line. So what I'll have to do is just use my experience to tell you where I think the line actually is. And I think it's right there. That's where I think the buyer seller interest will be equal. We'll get the turnover to the top side about 160.72. Now this is looking bearish this morning. I think at the moment, based on what I'm seeing, I think we're probably going to see a move below here. But we'll just have to wait. We don't trade what might happen. We trade what's probably going to happen. And in order to know what's probably going to happen, we're going to have to focus on the behavior that we know produces the results that we want. And so right now, we do not have a high probability advantage for the buyers or the sellers. We'll need to move below 16,000 to get that. Okay, so now on to our feature topic today. I wrote that I'd be talking about a trading psychology secret. And what I call this specifically, let me put a little sticky note together for you guys so you at least have some key thoughts there. I call this the psychology of consecutive loss. And I think you'll understand why I call it that after I explain it. But I can tell you that prior to 2010, much of what you're about to hear me say was never discussed. At least, I mean, I was in a lot of circles. This was never discussed. So this is something extremely valuable. I also want to acknowledge my friend Stuart, who has a PhD in the field of psychology. He contributed a lot to what you're about to hear. Now, the first thing that we have to acknowledge is that Forex trading is very different from ordinary life. Okay, now the primary difference between Forex trading and ordinary life is that in ordinary life, we tend to avoid consequences, especially those that produce pain. Now in Forex, we cannot avoid these consequences. So a Forex trader is accountable for each and every decision that we make. Think about ordinary life, put a dent in your car, you get insurance. You get sick, you got insurance. Most people, I know not everybody does. Miss a day of work, as long as you've been consistent, it's okay. So we kind of tend to use those consequences as bumpers, in our bowling lane, right? But the bottom line is in Forex trading, there's no insurance, man. There's no do-over. If you lose, the money's gone. That's the end of the story. Now, the real problem has to do with how consequences make you feel. I want to give you a common example in life, or at least a somewhat common example of life, so that you can see how we approach consequences when it comes to our decision-making process. And that's the key. It's when we make a decision and there's a consequence. Okay, so now just imagine a young man. He's 22 years old, and he goes out to the bar with his friends. He drinks excessively and acts in such a way that he wakes up the next morning, he's a little embarrassed, right? He doesn't give it too much thought because, heck, everybody can make a mistake, right? Especially when it's your first time. So he chalks it up to an excessive good time, right? Okay, now, a few weeks later, he's out with his buddies again, and he does it again. He drinks too much. He does even more silly stuff. He gets called obnoxious. Now, this time, when he wakes up and realizes what kind of night he's had, not only does he feel bad, he feels even worse. In other words, it's much stronger. Now, I want you to really notice here that with each consequence, not only is there pain, but the amount of pain increases. But notice what his brain has learned to do, what he does next. Here's what he does. He considers his approach. He might make a hard rule for himself, only 4 beers, whatever, right? So he beats himself up a little bit, but notice that what he did was he changed, he kind of double checked. Am I doing things right? Could I do things better? And so when he's out again, maybe he'll be more aware and he's less likely to make this mistake. Now, for a couple of months, this works just fine. He wants to have more beer, but he sticks to his rule. Then he gets a raise at work one day, and he gets excited, and his buddies go out to celebrate. This time, he gets absolutely wasted, and in part because he's been resisting drinking more when he's been out, right? And it's sort of like snapping him back like a rubber band, right? So he gets drunk and really stupid and embarrasses himself and his friends. Okay, so now we're on the third consequence. He wakes up with that terrible headache, and he replays some of the events of the night before. But at this third consequence, something else happens. He's no longer questioning his thought process. He's now feeling like there's something wrong with him. And this is shame. And shame creates a feeling of powerlessness in you. Now, if you have shame, you don't get your power back by asking your friends to forgive you. But that's a subject for another time. Now, everyone is a little different, but generally speaking, this is our approach to decisions in ordinary life. It's kind of like 3 strikes and you're out. But I want you to notice that each time there's a consequence, using the same decision-making process, there's not only pain, but the pain increases. Okay, so now we come to Forex trading. Let me see if I'm up to speed on my notes here. Yep, we're not there yet. Okay. So you're trading Forex. You make your first loss. You remember Vance says we can't win them all. You don't like the feeling, but it's okay. Second loss. You double check your rules. You make sure you're more focused. You just try to pay closer attention. You might even, double check. Hey, am I doing this right? But it hurts, and that's your motivation for looking more closely. Now, at the third loss in a row, it hurts a lot more. And just like in ordinary life, for the first time, new thoughts pop into your mind. Does this even really work? Am I just not cut out for Forex trading? If you're the kind of person that blames others, you'll be wondering if this really works, because it's not you. It's got to be something wrong with this scam called Forex, right? But if you're the kind of person who takes responsibility for your choices, then what you're going to do is you're going to question yourself. Am I not cut out for this? That's a real healthy way to do it. Maybe this is not a good fit for me. Or worse, maybe there's something that you're lacking. Maybe you don't have the brain power that others might have. And by the way, this is not true, but this is shame. And shame is no picnic. Now, I want to share a couple of things here. First of all, we tend to experience this in ordinary life. And second, that with each consequence, the pain is greater. Now, if you've been trading for a couple of years, I'm about to tell you something very important. Have you noticed that each time, just think back in your trading now, each time that you lose 3 or 4 trades, you change your method? Think about it. Because almost everybody does. So you change something about your method. You looked into, well, maybe there's another indicator I can use, or maybe there's something I need to know more about this entry point with this candle pattern, or maybe you're just looking for more market information that is responsible for what you're experiencing emotionally, right? So it's just natural. We're feeling pain, so we got to look for a solution, right? What you don't realize is what you're doing is normal, right? It's Forex normal. It's not normal in ordinary life to go out and drink 6 times in a row and be a fool. That's not normal. What's normal is first time you do that, you get to 3 times, you go, dude, I better change something, right? Okay, but you're bringing that I better change something into a situation that's totally normal in Forex trading. Okay, so let me explain the problem. Okay, now let me scroll down a little bit. Now, even winning 70 to 73% of your trades, When something changes in the market conditions are different, you can expect 4 to 6 losses. We call this a drawdown. Okay. This is simply, it's just market movement that happens that you can't anticipate. Now, you saw the pain that you experienced at 3 losses. Can you imagine for a moment how that would feel at 6 losses? I mean, if you have poor training and education, you're going to want to shoot the guy who told you about Forex trading, because it is miserable feeling. It's terrible, man. You question yourself. How did you even get into this? Did you even ever do anything worthwhile in your life? I mean, it's terrible. So you really need to understand what's going on here, because you don't want this to be something that affects your future in Forex trading. Okay, and again, here's the thing. This is normal. Okay, I want to remind you that that you've left ordinary life and you're now in the Forex trading world. In this place, you can't survive with what you've learned when you were a child. You have to learn to read human behavior, and you have to retrain yourself to approach decisions in a different way. Okay, otherwise you're just going to if you keep doing it the same way, you're just going to keep getting the same emotional response. Okay, now I want to share what we discovered on our journey here as we were examining this. And some of you have been doing this for a while, and this is going to be an aha moment for you. Now, you might have heard that if you target 2 to 1, that's risking $1 to make $2, and win only half your trades, you can still make a profit. I'm going to tell you right now, that's absolutely true. In fact, I demonstrated in a live time setting that if I won 57% of my trades, I could still make a profit. Okay, but there's a problem with that, as you're about to see. Now, from reviewing hundreds of trades, real-time trades, here's what we found out. Your risk to reward ratio correlates directly. Now, I'm going to confuse you here for a second, but your risk to reward ratio correlates directly with your win-loss ratio. Your win-loss ratio correlates directly with your drawdown potential. Okay, so I know that might not have totally made sense, but what I'm saying is your risk to reward affects your win-loss directly. Your win-loss directly affects your drawdown potential. So here are the actual numbers. First, win-loss ratio and drawdown potential. So if you have 70% wins, 70 to 73, you're going to, when something changes, the market conditions change, you're going to suffer about 4 to 6 losses during a drawdown. This is normal. Okay. So if your trading setup is 80% wins, you're going to have 2 to 3 losses during a drawdown. If it's 65 to 68%, look at this. 65 to 68% wins, 8 to 12 losses during a drawdown. Now notice that the less you win, the losses are actually increasing exponentially, just like your emotional pain, right? I don't think there's any coincidence there. But look at this. Look at this number down here. 2 to 1 target, 65 to 69% wins, 8 to 12 losses. So while it is true that you can risk $1 to make 2, win only half your trades and still make a profit, that is mathematically true, but it's psychologically almost impossible, because nobody, I mean, unless you're really a strange bird, you're not going to survive 10 losses in a row trading a method. You probably don't even have the right risk settings. You might be risking 5% per trade. Well, your account's going to be wiped out in no time at all. So take a look at these numbers, you know, and then look at the risk to reward ratio. 1 to 1 equals 70% wins, 0.75 to 1, risking $1 to make 75%. That gives you 75 to 80% wins. 2 to 1 is, again, like I said, 65 to 69% wins. All right. So now there's a lot I could say about this, but let's bring this back full circle to each of you to kind of give you an idea of how you can use this information in a practical way. One of the most powerful principles I ever learned in business is to make your first dollar first. Let's see, do I have that on there? Yeah, there we go. Make your first dollar first. When I focused on that, I only spent money when it was absolutely necessary in order to reach my goal. So it's kind of magical about how it guides you. That's what good principles do. But when I entered Forex trading, I had to think of it a little differently. Obviously, you can open a live account, you can, make a couple trades, you can get totally lucky and make money, right? So you have to evaluate your success in terms of series of trades. You can't do it based upon what happened this week or, in a few trades. So here's what I want to share with you. Your first goal should be consistent profit. Now, if you look at the numbers that I shared with you, the easiest way to reach that first goal of consistent profit is to focus on the best possible risk to reward ratio, which is right here. It keeps your losses during the drawdown low, and it gives you a high percentage of wins. So look at the wins, look at the losses. So what this does is this gives you a little bit of an edge, actually quite a bit of an edge in terms of how you're feeling about what you're trading. Now, obviously, to get your wins in that area, you need to have the complete logic. But I just wanted to show you the relationship of what you end up trading. If your method is winning 70% or more, you're much more likely to have a good experience and grow than you are if you've got a method that's producing 65% wins. Okay, so what I would encourage you to do is focus on 0.75 to 1 until you're making consistent profit. So I'm saying make it easy on yourself. You're trying to ride a bicycle around the block. Don't add into it pulling a wheelie, right? Or standing on the seat or something that makes it harder, because it's already hard enough. So my suggestion is to make this as easy as possible to achieve that first goal, which is, you know what? I can open my charts. I see my setup. I've got my trading plan. I'm executing. I'm evaluating over a series of trades. I'm making consistent profit. Do that first. Don't think about millions of dollars. Don't think about your new life. Just focus on being able to put a brick on the wall with the right amount of mortar, and hey, it stays there, right? Okay, those are the building blocks, right? And as far as making more, okay, I'm going to read you here in real time how you make more. How do you make more money? Okay, right here. Your experience with your method. As you're trading your method, your setup, you're going to see more opportunities. You're going to document those. You're going to get experience trading them before you bring them into your live setting. Guys, it's just like anything else in life. Forex trading is no different. You just gotta find out what it is that you need to do to achieve your skill, and then you gotta practice. And if you have someone watching you, like let's say you were learning to hit a baseball, you can sit there and by trial and error, you can figure out eventually how to hit a baseball. But if you have someone watching you and helping you, it's a lot easier. So on that note, I only have one other thing to share with you guys. And let me bring up the page. I want to go here. There's a link right here to the Forex trading program. This is going to disappear here after a few days, but there's a link right here on the right. It's not on my webpage. It's only right here. So if you want to go back, restart, hit join the conversation, I'll find this link. I just want to share this one thing with you. Since September of 2012, I have been working on a special project for this entire program. Been putting in tons of hours into each person, only charging them $99 a month. Sometimes I've spent 6 hours in the first month with a single trader. Why was I doing that? I was doing that to learn more about them, about the experience, to make sure they did well. Well, I've been doing that a long time. Next week, that personal coaching by me is going up to $5,000. So if you're interested in the $99 program, after this weekend, it's over. So you can see an overview of the details there. There's a link to sign up at the bottom. You can also just email me, Vance at Forex Art of War, if you have a question. But that's a risk-free offer. You have absolutely nothing to lose. Get in, try it for 30 days. If you don't like it, you move on. If it's everything I'm saying it is, you're like, oh, wow, I love this. And by the way, you know, I haven't shared this in a while. Look right here. Go up here to member experience and click on this on my webpage. Read all these. There's pages of people talking. I didn't like take their words and change them around. I've got a place where they can type this stuff up. Read it if you're serious. Okay, so anyway, let's take a quick look at price before we jump out of here, since we spent so much time talking about psychology. No change there. No change there. So I hope that, you know, through what I shared this morning, you got just a little bit of insight into how Forex trading is working. Because, you know, how we feel is such a huge part of Forex trading. And I hope what I showed you will help you to understand why you're experiencing some of the things that you are. Members, I'll see you guys in 30 minutes in our live trading room. And everybody else, have a great day. And I'll be back Monday with a new show. Bye, everyone.